Yeah, so starting off with well, maybe we should start with investing first. And
Yeah. I have one point. I have one point to make because yesterday I had a meeting and there was this girl who's a teacher and saying how important money is and stuff, and we need our jobs. And I said, wait a moment. Our goals should be not to need our jobs. That should be our goal. Because if not, you're gonna work until you die, dude. Uh, so my new formulation got inspired by Grant Cardone. All your salary, anything you earn, should be for investing. Everything actively earned should be for investing, and only what comes from the passive cash flow. That's where you use to buy groceries, to buy a Ferrari, whatever you want. But your salary should go aggressively, until you're out of the rat race, until you're not a slave anymore, until you don't need to work in order to survive. Because if not, you're always, like a mouse inside the rat race. So nobody does this. I mean, 99% of people don't do this. But we are in modern day slavery. We are slaves. If we're not working, we die of hunger. We have to beg from my mom food. And that cannot be. It's not correct. So okay, we're slaves. We were born slaves, most of us, fine. Now we have to buy our freedom. How do you buy it? Through creating passive cash flow. You start investing until there's a moment. Because the more I invest, more passive comes, little by little, with stocks, for example, with dividends. And one day, I earn enough to pay all my bills. It happens eventually. Depends on your speed. Depends on how much gasoline you
how
put.
aggressive you are, right?
Yeah.
You have an
And then,
aggressive profile as an investor.
uh, very safe way. No, 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 no. No risk.
No risk.
I'm talking about a way to get rich 100% sure with no
Okay.
risk. The more
Okay.
you risk, go to the casino. I say don't risk. I teach people how to get rich the slow way. If someone tells you you're gonna make money fast, run. That's a scam. That's a scam. Run away.
I would agree
There's
with
no
that.
there's no shortcut. It's very risky. You can get rich in the casino. You can buy a meme coin and it goes to the moon, but that's like the lottery. That's luck. That's not investing. That's speculating.
It's gambling.
So you cannot make a strategy out of speculation and luck. That's not a planifiable. You're not gonna make a roadmap with that. But baby steps and increasing your passive income every month in a safe way, say in real estate, say stocks with dividends. That way, yes, you can do it. It's gonna take you longer, but you're gonna get there for sure, 100%. 100% sure. It will take you long. Uh,
Yes.
Clifton, you're a
Yeah.
stock investor. So what's your? Are you buy and hold or buy and sell?
It's all about long-term
There you go.
dividend earning investments.
Boom! You're my
Um,
new friend.
yeah. Now, I wouldn't go as far as say 100% because nothing is 100% with investing, but it's very tried and true. It's very consistent, and it's a definite game plan that can be reliably um, carried out. And that's what most people get caught up on, I think, is that, especially when in my country, we're raised in a way to expect and want instant gratification. And that's why all these get rich quick schemes make so much money for people, because they tell people, oh, in 3 months, you could be making $10,000 a month doing this or that or real estate, whatever it is. So I see it as a business. Investing is a business to try to gain financial independence. So we probably have a lot of this very similar approaches to it. But for me, it's not about just wanting to be rich or making more money or buying things. It's about, like you said, getting out of the rat race and earning our freedom from the monetary system. And the reason is because you also said we're pretty much born into slavery, and it takes over so many hours of your life, the best years of your life. And if you can break away from that, yet still be able to survive and thrive, you now have time back, which is the most valuable thing. You're buying your time back. So instead of just going to your job and working for your money, you're putting your money to work for you. And it takes years and years of accumulation. And my strategy that I've adopted, I have a couple different things that I use for that. Hold on one second. I had to turn on my fan. My main strategy is dividend growth investing.
There you go.
And you've probably heard of groups of these particular stocks called dividend kings and dividend aristocrats. If not, then that's my main approach, is to invest in those. These are very long-term investments in companies that have been around for many, many years.
Big
Who not
company.
only, yeah, they don't just pay a dividend for a lot of years, but they've been paying it and raising it consecutively for at least 25 years. So the dividend aristocrats are, I'm in the US, so it's US based companies, but mostly there's some good ones outside of the US too.
Yeah,
But-
the same in the Philippines. You can do the same.
Yeah.
It's just there.
Yeah, I've been trying to help Stephen with that, but he has, limited choices over there. But these dividend aristocrats are companies that belong in the S&P 500 and have shown that they've raised their dividends 25 years in a row. So these are large companies that have also proven that they can be stable enough to raise their dividend 25 years in a row consecutively. And then there's the dividend kings, which may be smaller companies, but they've done it 50 years in a row.
Wow.
And that in itself is a big, it's proof that these companies have a very stable financial management. So they can, if they can do that, then it tells you a lot about them, because it's very difficult to consistently raise dividend payments to all of your shareholders every year. So the ones that can do it for that many in a row, that says a lot about them. And chances are, if they've done it that many years in a row, they'll continue to do it. And that's the basis of the approach.
Yeah, and say you invested in 15 companies. If one goes down, it's still fine because the other ones keep on going. So it's not that you're gonna go broke because eventually one will go down, because that's also normal with companies. But your strategy continues to work, and the beauty of this is you buy one time, you don't need to buy. You can continue to buy, but you buy one time and it will pay you for the next 25 years. It's a dream.
Yeah.
It's like a fantasy, but it's legal and it's doable by anyone. But most people don't do it for some reason. Or I don't know, they're scared. See, we go back to fear. People are scared because they don't know about it. They're scared of the unknown.
Yeah. Most people are intimidated by the financial system, and they think it's too complex for them to understand, and it's really not. It's fairly simple. It's just that there's these terms, this terminology they use for all these financial benchmarks that make it sound like it's complicated, but really it's not. A company pays dividends to its shareholders through its profits, and it's just like profit sharing, and all you have to do is know how to open an account online, know how to select a symbol and hit the buy button, and then after that you do nothing. See, that's what most people have a problem with is they buy something, they get emotionally invested in it, and they follow this. There's a lot of news out there. There's a lot of financial websites and news out there that want you to, they profit off of you continuing to buy and sell and buy and sell, right? And they work off that fear, right? Oh, this stock, this financial analyst says this is going to go down. You need to sell now. And there's just all of this hype in the marketplace. And really, if you have confidence in what you invest in and you're willing to hold for ideally a minimum of 5 or 10 years, and I would prefer to just buy things that you plan on keeping until you die and you pass on to someone else.
Yeah.
The forever stocks, right? Like Apple. If you own Apple, I'd say, I'm not saying what you should do, but I'm not going to sell any of it, right? They're where they're at for a reason. They run very efficiently. Even though they don't pay a high dividend, it's going to continue almost guaranteed. So